Welcome back. Hope you're having a good morning. Well, let's get to the big deal that was announced yesterday. Tega Industries is partnering with the Apollo funds to acquire Molycop in a $1.5 billion deal. To help us out with how this transaction is and give us some clarity with regard to it, we're joined by Mr. Mehul Mohanka, the Managing Director and Group CEO at Tega Industries. Hi, Mehul. Good morning. Thanks a lot for speaking to us here on CNBC-TV18. Well, let's get to a couple of aspects then. How much of debt comes in from the acquired entity? If you could help us out with that. What is the debt you're going to be getting onto your books?
Currently, the debt at the target level is roughly about $1 billion. And the attempt is to bring the leverage down after the transaction closes.
All right, Mehul, how much do you target to bring this debt down? As you're saying, you're looking at bringing it down. Give us a sense as well on what's the broad borrowing cost?
Yeah, sure. I think, through the consortium arrangement that we have with Apollo, the intent is to structure the debt in a fashion that we leverage it down to around 800 million odd levels from the current billion. And that should help us, deliver some improved benefits in terms of interest cost reduction with the leverage coming off and hopefully even an improvement in the credit rating.
All right, Mehul, I just missed out. What is the current cost of borrowing? If you could help us out with that number.
So the current borrowing cost is roughly around, 835 bips, somewhere in that region. We don't have all the specific details yet, but the attempt would be to try and improve on the current rates.
All right, Mehul, though the valuations are looking attractive, the problem is that Molycop revenues, they have not grown, in the last few years. So my question to you is, what are the scaling up plans of this acquired entity, that's Molycop? And obviously, you have hinted at some margin improvement. So give us some color on that as well. What is the margin improvement we're looking at from around this 11%?
Molycop has generally been a 3.5% growth business year on year, and that's true of its, I would say, 1 decade history. The attempt is to bring two complementary businesses together in a way that we can improve better value proposition to the customer so that they benefit from this combination of two complementary product lines. And that would hopefully help us deliver a better margin profile for both businesses, both Tega and Molycop. So I think where Molycop today operates at is roughly around 11% EBITDA levels. Our aim would be to try and improve that over the next 2 to 3 years to, on an average, anywhere between 13 to 14% levels. Tega, as operates at a CAGR of 15%, delivers about close to 22% EBITDA. So the margin profiles are different, but we hope that on a console basis over a 3 to 4 year period, we would be roughly at about 18% on a console basis.
Mehul, morning, and congratulations on the announcement. It's a big one. Help us with the terms of payment for this transaction, because this is, at the end of the day, a leveraged buyout. How will this work?
Both Apollo and Tega are going to be funding this transaction through a mix of equity and debt. Tega is going to be putting in about close to $361 million for a 77% stake in the business. Apollo would be bringing in the rest. And so that's the overall capital structure at this point.
Okay. Can you, Mehul, just exactly break up the funding? I mean, who's bringing in how much on board?
So as of now, this is still very indicative and early, early into this transaction. So the way we're currently thinking around it is to bring in about $118 million, close to about 1,000 crores in debt in the books of Tega, and the balance about 248 odd million in a primary fundraise.
Okay.
That will be through a mix of pref and QIP.
Okay.
That we'll be bringing to the market. Of course, these are still very indicative in early years. We may think of probably replacing some of the debt numbers with equity if it so happens to be.
Mehul, let's talk a little bit more on that equity fundraise then. You're talking about around $250 million, right? $248, $250 million. How much of that will come in from the promoter group?
The way we're thinking right now, promoters would put in, as my family, we would put in about close to $20 million.
$150 million of equity raise. Got that. So Apollo is going to be part of the SPV, but will they be participating in this particular equity raise at Tega Industries itself?
So there's an indicative interest from Apollo to also participate at the Tega in the Tega cap table, other than just the target. And currently, we are going to launch a roadshow to try and reach out to as many institutional investors, HNIs, who would want to participate in this transaction with us.
Right. What is the level of promoter holding that you're comfortable with?
So all things going well, we expect the promoters to go down from 74.8 to roughly around 64%.
Okay. And which year will the deal become EPS accretive from?
On a conservative basis, we would say it will get EPS accretive from, I would say, between the second and the third year.
Okay. Mehul, it's a big deal. I'm sure you've thought this through. But in case investors in the street are not too happy with it, because it's a large deal, you have to raise a lot of money. There's debt coming in. The entity you're acquiring also has a large amount of debt. If the street doesn't like it, will you rethink?
I hope the streets actually are as enthusiastic as I am. I think a couple of reasons. One is, of course, that all the debt in the target has no recourse to Tega. It is value accretive for Tega and the target as well. We've had, as Tega, we've had experience of running businesses globally. We've turned around businesses. We've acquired businesses. So while the scale is sizable, we remain undeterred based on just the experience that we've had in working in the global environment. So we're very bullish that we're going to be able to pull this off.
Well, absolutely. Good luck to you with that. But just dive a little deeper in terms of what all does this entity Molycop bring to the table, and what was your thought process? Because you are going in for something, which is pretty large in size.
We first looked at this asset way back in 2017. So this asset first became available in the market in 2017 when their parent, which was an Australian company, decided to sell the business. And in 2017 was when I had a first look at the business, but we didn't have the currency to be able to participate in the transaction, and the current owner won the bid. And since then, they reached out to us to look at whether there's a possibility of how Tega and Molycop could work together, because they very early on realized that there's some value in combining two complementary businesses. And when they looked at the entire global space, they saw Tega to be someone that could be interesting for them. And that's how the first contact got established. They visited us in India. We had a long, meaningful interaction, but then just the structure, what they were proposing was something that I thought was not very interesting at that time. And since then, they've owned the business for about 8 years now. I have been tracking this business, so it's been something that's been sitting on my mind for many, many years. It's not something that I just jumped into in the short term. We've been thinking through this about how we could put two complementary businesses together, and just this opportunity came along when it's been an 8-year vintage for the private equity firm. They wanted to exit this business, and they thought that the best home for this would be in Tega, and the fact that we could probably do better with this business over time than what they've been able to do.
Mehul, in the last 5 years, your CAGR has been roughly around 19-20%. Your margins have been at around 20%. But you're clearly very ambitious. We'll have to see how the street reacts. That said, 3 years down the line, what could the consolidated revenues look like, the margins and the debt as well? Give us some guidance for 3 years down the line.
Yeah, so in our model, we've taken like a revenue growth at a very conservative level for the target. We've maintained it at about 3.5 to 4%. They're currently doing about that much. So without putting in too much of high growth pressure on the target upfront, we've kind of modeled it on a conservative basis to be around 3.5% to 4%. With Tega consistently delivering at about 15%, we're looking at leverage to come off by year 4 to about closer to 2 times of EBITDA, 2x, 2.5x EBITDA over 5 years. And we should be at an EBITDA level of close to about anywhere between 17 to 18% from third year onwards on a combined basis.
Okay, well, good luck to you with those plans, and may your all your targets be on track. Thank you very much for joining in and patiently taking all our questions and explaining the deal contours to us. Well, that's Tega Industries, big newsmaker of the day, acquiring Molycop for $1.5 billion.